Folks, let's talk about gas again. And what we had yesterday was a move through the $2 level, just probing through it, not much, and then a big reversal at the $2 level. That's pretty important, that little fake breakout down through the bottom, and then a rally back up. I would have thought that we might have got down to $1.85 or $1.90, but we didn't get quite that low. A double bluff, I suppose. Now, here's the bad news and the good news, I suppose, combined into one story. This level that we're at now, at $2.33, is a very important resistance level. I've just closed my futures contract. They were going to close tonight anyway, and I had to decide whether to hold on to the contract and hope for a little bit more, up to more or less where I got in at $2.70. I'm worried about this level because it's a ledge bottom. It was that triple bottom that we were talking about the other day. It's the level that we held above for so long. It's also the level where there will be a lot of positions covering their longs. Remember, people were buying at this level after this triple rejection, and particularly after a triple rejection, there would have been more buyers piling in, thinking that we had a bottom on natural gas. As it happens, we didn't have a bottom. On the fourth attempt, we broke down through that ledge, and that breakdown will have stopped a few traders out, causing an acceleration to the downside. But there will also be traders, quite a lot, who were holding on to those positions, which they took on the formation of that, triple bottom. Was looking like it might have been a quadruple bottom. A lot of traders holding on to their long positions, but still holding on to those positions. They'll be relieved, like me, to get out of their longs at this level. Exactly what I've just done. I had a futures position, bought higher up, admittedly. Not much higher up, but a little higher up. But I'm willing to close those futures trades, futures positions right here at $2.33. And there'll be an awful lot of traders doing exactly the same thing. I expect that we'll see some rejection from here. This is a 4-hour chart. These are the moving averages. We've got the 20 period, the 50, the 100, and the 200 above us on the 4-hour chart. And you can see we're coming into that ledge, and also the 50 and the 100 period moving averages. So that's what it looks like on a 4-hour chart. My strategy is to, as I have done, exit the trades. I would have been closed out anyway, closer to midnight tonight. It's a few hours ahead of that right now, but my positions would have been automatically closed if I didn't close them myself. So I took my fate into my own hands and closed them myself. It's always nice to do it yourself rather than have someone force you to close the trades or close them on your behalf. I think we might get another dip down to $2. I'm hoping we do. In fact, I think we still might get to $1.85. If we do get a dip to $2 or $1.85, I'll be looking to rebuy this position. Now, those who are still long, if you can afford to get out at this level, take a small loss. It might be worth it, like I've done. Or you might want to hold on and hope for a rally back up to $2.75, which is the next resistance level, and it's where the 200 period moving average is on this 4-hour chart. And beyond that, we get up to $3.55, which was that next ledge that formed. Wherever you see these ledges, you can be sure that traders will have got into positions at those ledges on those repeated attempts. Here's another triple bottom, and the fourth attempt collapsed down through it, tried to get back above, and then fell back down. So wherever you see a triple bottom or a double bottom or an attempted quadruple bottom, you should be aware that there are traders who have taken positions there and who are either holding on or who were stopped out. The ones who were stopped out caused a further depreciation in the price. The ones who are holding on will be just pleased to get out of their trades at that price. So those levels that you need to be very aware of, $3, call it $3.40, $35, $40, $50, in that region. Then we've got $2.75, and then we've got this level that we're at now at $2.33, where I got out. Now, that's the 4-hour chart. If you have a look at it on a day chart, it's quite clear that this level, I'm going to remove this line here. It's quite clear that this level that we've just moved up to is a significant resistance level. It's going to be tough to get above there, and it's going to be tough to get above the next one up here, which is at $2.60, 55, 60, and then we've got that $3.50 level up there. That one has already drawn in. So those are your levels on natural gas. That level at $3.40, $3.50 is where the 50-day moving average is descending upon us. So there's plenty of work for natural gas to do. There are going to be people who have been terribly hurt by this move down, and the more people experience pain, the more likely they are to hold on to losing trades. And unless we get a very dramatic short squeeze, I think we're going to struggle at some of these levels. My strategy, to repeat, I'm going to look for another dip back down to $2 and perhaps even better, $1.85. Not good news for those who are still long, but it's possible we could get down as low as $1.85. But the key today is $2.35, $2.33, which is where we are right now. I hope you found that useful. It's a bit of a mishmash of analysis here, but I'm trying to do it quickly so that I can give you my thoughts whilst you're trading and whilst you're in your positions or considering taking new positions. For those who are not in a natural gas position, I still wouldn't get into one just yet. I'd be looking to wait for a dip back down to $2 or $1.85. I could be completely wrong. We could go from here soaring up to $2.50, $60, $3.40, $50, $60 and higher. I don't know, but I think the odds are more likely that we'll have to retest and perhaps form a double bottom or another sort of false breakout lower before we then get the dramatic move higher that we're all looking for. Take care. Have a great trading day.